Well, silver tends to oscillate at a wider pattern than gold. If gold goes like this, silver tends to trade a lot wider. And silver was way oversold at under $19, down around $18. And we are in a bit of a physical silver squeeze here in the US for products. Whether that's contributing or not to the silver price moving up ahead of the gold price, it's hard to say at this point in time because that's just happening. But silver is actually leading gold at this moment in time, which is very unusual. And some of it may have to do with manufacturing. A lot of silver is used in manufacturing, solar panels, electronics, electronic vehicles, where gold is the currency of last resort. So we don't really have a problem with the fear factor in gold. I think people are just sensing that silver is oversold and it's catching a bit more than gold right now for that reason.
No, we don't often have bullion dealers on the program, so I'm going to tap into your area of expertise there. And Dana, like, what does it look like in terms of demand right now? You see inflation very high. Like, are sales through the roof? Are they slower? Are they fat? Like, can you give us a bit of a sense of what is happening right now for you or in your business?
Sure. Well, for 2020 and 2021, once COVID hit and all that government spending was dramatically increased, our sales quadrupled as an industry. We suddenly went from selling about 70% of normal business to 4 and 5 times normal business. And we had that for most of 2020, 2021. So we have seen a drain in, COMEX supplies of silver over the last couple of years because of that. In 2023, sales have been good. They haven't been great like they were the last 2 years, but they're still strong. And we've seen a bottleneck, particularly in the 1 ounce sovereign minted silver coins physically. If the gold to silver ratio is 85-1, which is about where it is, it takes 85 ounces of silver, those blanks, to equal 1 ounce of gold. So the time and effort to make the similar dollar amount in silver is a lot higher. And the bottleneck is the blanks. So we're not seeing enough of the blanks being made, and demand has outstripped the mints around the world's ability to produce 1 ounce coins. So we are in a silver squeeze. And now that the 1 ouncers are problematic, especially the US Silver Eagles, which the US Mint has just been way behind the production curve this year. They're making far less than they have. Premiums for Silver Eagles are abnormally high at $16, $17 over the spot price, almost double the spot price, which I've never seen before in my career. We've been negative selling those against coins like Canadian Maple Leafs or Austrian Silver Philharmonics or South African Silver Krugerrands, but even those are in tight supplies. And now that's rippling down into the bar manufacturers, the 100-ounce bars, 10-ounce bars. So premiums for these other products are higher than normal, not abnormally high, but they're still, you're paying $2 and $3 an ounce more than you would in a normal market. And that's just because there's not enough product to meet demand. And until the 2023 products, and we're in a transition phase here too. Plus, the Queen died. Now, who thought the Queen would screw up the silver market when she passed away? But her picture is on 3 of the major products, Britannia's, Maple Leafs, and Australian kangaroos. So the Canadian Mint stopped production for about 3 weeks until they figured out what they were going to do next during the mourning period. And that came right at a critical time. Plus the low silver price, under $20, has created a lot of demand. So it's been a couple different waves of hit us, all culminating in higher premiums for physical. And we're going to be in this phase until the 2023 products start flowing in earnest sometime during the first quarter of next year. So the price on the street for physical silver is $24, $25 an ounce when the spot price is $19 an ounce.
Dana, allow me a naive follow-up question to that. And again, it's like I'm not the physical, the bullion world is not my world. I have to admit, I'm more on the stock side. But curious, like who sets the premium?
Well, the mints sell to their distributors. And, I'm not a mint distributor. I'm not big enough. So the U.S. Mint has 12 different worldwide distributors that they sell to. And the business that you do with the mint alone is 50 to 100 million a year, right? So if the mint says you're taking 200,000 Silver Eagles this month, you're taking them, right? And then it's your job to sell them. So when everyone's flush with supplies, premiums are low, and it's a very competitive market. When there are less physical supplies, there's less units to sell, and these are businesses that have to be profitable. They simply have to get more for that same unit. So the distributors charge what the market will bear to secondary dealers like myself who deal with the retail public, right? So it's the mint distributors are making more money right now than they might otherwise, because the mint charges aren't necessarily as high relative, although the mints have raised their rates too, because they can get more as well.
So Dana, another question. I'm not sure if you can answer it, but what are you advising your retail clients right now? Because looking at the premiums, which are pretty much 100% above, the market price per ounce, what are you advising right now? It's sort of, it feels like a question I'm asking at a restaurant when I'm asking the waiter, what's best here? And they always say everything, right? So.
Right. Well, when the premiums on the Silver Eagles got very high, we stopped selling them, or we told people there are much better values to be had. So we focused on Maple Leafs next, and then Philharmonics, Krugerrands, and Australian Kangaroos, depending on who had the lowest premium, where we could get supply at the lowest premium. But most of that, what was available, and there were pockets here and there of different products that were cheaper, that's what we would offer our clients to try and get them the best value, right? Because at some point in time, those clients are going to want to sell back to us. And when they're paying too high a premium in a normal market, they're not going to recapture that on a resale basis, usually, right? And I don't want to be the bearer of bad news telling my client, hey, I sold you a bill of goods, recommending an overpriced product when you could have bought something more reasonable. So that always is what governs how we recommend to our clients, because our clients are our most valuable asset. If we don't have clients, we don't have a business.
They usually keep coming back as well in this space.
Right.
So.
We enjoy a good repeat and referral business as well. And that's because we try and treat everybody very, very fairly, and we're very competitive. But it's an unusual market. We've been in this phase a couple times over the last 10 years. Following the great financial crisis, we had a squeeze. Following COVID, we had a squeeze for about 3 months. We're in another one now. It's not unusual, and we do game a bit forward production. So we anticipate what the Royal Canadian Mint can deliver over the next month, what the South African Mint can deliver, what the Austrian Mint can deliver. But right now they're making less of the current year, 2022, because they're gearing up for 2023 production. And those coins aren't released yet. So it's just a culmination of a couple different events creating a squeeze in higher prices, premiums.
Interesting. Like, how does supply out of the ground play a role in this? Is there enough supply coming out of the ground? Because I've looked at the numbers. I think we're actually in an oversupply situation on the silver side right now.
Yeah,
by a few, 80 million ounces a year or something. It's not a huge number, but you probably know this better than me. I'll just let you discuss.
Well, I'm not a mining expert, to be honest with you. So there is enough silver coming out of the ground, but there's a lot more attrition in silver for other uses, in industry, which we don't have in gold. Most of the gold that comes out of the ground stays above the ground and is eventually resellable, where silver has a much higher attrition rate in use for manufacturing and creating things. So we do get into a bit of a silver squeeze. If you look at the COMEX warehouse, we've seen a big drawdown there, but there's still a lot of bars. I mean, you can buy 1,000-ounce silver bars. They're not easy to trade. They weigh 70 pounds. They're about this big. And they're hard to ship because of their weight. If you want to sell something, you can't sell half a bar without a hacksaw. So you can still buy, big bars economically, but the smaller bars are even problematic right now. 100-ounce, 10-ounce, 1 ounce in particular.